Good morning. This is Knippa for NakedTrader.com on the floor of the Merc in Chicago. This morning I want to talk about my market plan and some of my market projections. The one thing I have seen in the last several days is that when we have seen rallies, yesterday was a perfect example, when we rallied back, the NASDAQ futures still managed to lose a little bit of ground to the S&P futures. In my mind, that is a weak undertone to the market. So for now, as long as I see the NASDAQ losing to the S&P, I'm going to be a little bit more willing to trade from the short side. This morning I've actually started looking at actually trading that NASDAQ spread versus the S&P and then use that to kind of accentuate my outright position. But as long as I see NASDAQ, now I've said this before and I wanted to go and explain it a little bit in more detail. So it is just as simple as if the net change in the NASDAQ is plus 5, but the net change of the NASDAQ is the S&P is plus 7, that means that the NASDAQ is losing 2 handles to the S&P. In my mind, that is a weak market and a market that I want to trade from the short side. Now, so when I'm looking at those net changes, I'll also try to key off of the opening range. I don't want to be short above the opening range. I don't want to be long the opening range. So if I get those 2 signals to line up, then that'll give me a trade signal. So for now, I want to be a little bit defensive here. As long as I see the NASDAQ losing ground, then this market for the time being may have topped out. Like I said, may have topped out. This has been a very strong market, but on our strength, it has been led by the NASDAQ, and you have to respect that. And it's certainly possible it could come back again today. The other market that I think is very vulnerable, I think the crude oil market has been piggybacking on the S&P. The stock market strength has drugged the crude oil up. If you look at the back spreads have been very weak, putting premiums in the back, discounts in the front. That is not a sign of a strong market. I think the crude oil is trading at these levels because of the S&P and because of the stock market. So crude oil, I want to be a little bit more aggressive about selling rallies as long as I see that weakness in those spreads. So for now, a good target in the crude. We had some old lows around the 104.20 area. I'd love to see a bounce up in that area and might consider a short in there. But as long as I don't see any significant firming in these forward spreads, I want to try to trade crude from the short side. This is Knippa for NakedTrader.com on the floor of the Merc in Chicago.